Bank of Canada recently raised interest rates by another 75 basis points, or 0.75%. This brings the overnight lending rate to 3.25%. This is the highest it's been since 2008, and we're into 2022 now. So what does that mean? And what can you do now to ensure that you'll come out of this ahead financially? Hi, my name is Brandon and I'm a certified financial planner. If you enjoyed today's video, please hit that like button and subscribe. An overnight rate is the rate at which the central bank lends money to other banks at the end of each day, hence calling it the overnight rate. Or in simpler language, the interest rate that a large bank uses to borrow from each other. It's a short-term predictor of the interest rate that may affect the economy. Many economists consider this to be in restrictive territory, since governments, corporations, and even households are over-leveraged and have taken out a ton of debt over the last few years. Most people owe a lot of money for their business, mortgage, or personal life. A couple years ago, Bank of Canada Chief Tiff Macklem said that interest rates will be low for a long time.
Interest rates are very low and they're going to be there for a long time. We have been unusually clear about the future path for interest rates. If you've got a mortgage, or if you're considering to make a major purchase, or you're a business and you're considering making an investment, you can be confident that interest rates will be low for a long time. Low interest rates make spending and investment more affordable, and spending and investment will support the recovery. That would be our message to Canadians.
However, since March 2022, the Bank of Canada has aggressively raised interest rates, and this has immediately impacted anyone with variable debt. And that debt is continuing to become more and more expensive. Moreover, higher interest rates typically lead to lower prices in the stock market, since companies cannot grow as quickly due to cheap debt. Fixed income investments now have become more attractive, specifically GICs, treasury bills, and any government debt, sometimes yielding as much as 4%, when many of these debts were sub 2% just 6 months ago. Higher interest rates also leads to lower real estate valuations because mortgages become more expensive, which in turn affects the demand. We can see all this happening right now. So what does this mean for you? Well, it's important more than ever to have a solid understanding of your cash flow, ensure you have an emergency fund, and look for discounts in asset prices to build your long-term net worth. Historically, central banks tend to cut rates when the economy is grim. And so at some point in the next year, my expectation is that the economy will be turning more and more grim. This is exactly what happened in 2020. During the pandemic, central banks dropped the overnight lending rate to the bottom bound of 0.25%. This extremely loose monetary policy has led to rapid price and asset appreciation in the stock market and the real estate market. However, with the current Canadian inflation rate being at 7.6% as of July 2022, they really need to bring down the inflation rate into that 2% range in order to stabilize demand and the economy. Otherwise, we're going to continue to see everyday goods like our food prices continue to increase. High inflation isn't good for the economy, as it makes money worth less and it doesn't allow people to have confidence in the financial system. This has been seen in a lot of developing countries where we see hyperinflation, but we have not seen inflation like this since the 80s here in Canada. So ultimately, everyone's situation is different, and so you really do need to think about your own personal goals and how all of these changes affect you. Most wealth is actually made during downtrends like this. So if you can make the right decisions and purchase asset prices at a discount, and you're optimistic that the future is going to be bright, I hope some of what we've talked about today has been helpful to think about your own personal situation. Ultimately, everyone's situation is different. You just need to look at the economy, look at your personal situation, and try to do what's best to build your wealth. You could buy some assets on the cheap, or you can choose to bide your time and see what's going to happen. If you have any questions, or if we missed anything, please let us know in the comments down below. Thanks, and we'll see you in the next video.